All right, good morning, everybody. I always want to start with what happened in the overnight hours, get an idea, get a feel for the kind of day that we could anticipate today. It seems that the peace talks didn't really generate anything substantial. That kind of deflated everybody's expectations a little bit. The market lost some of that warm, fuzzy feeling that it had. Yeah, not much of a surprise there. The markets around the world kind of soft, started to actually present a little bit of weakness. There has yet again been new discussions about a bear market rally. We hadn't heard discussions on that for a few days, but that talk is back. Really good numbers yesterday helped fuel that move to the upside. We have more employment numbers today that are going to be pivotal for the rest of the week. This is the game changer between now and Friday. If the market doesn't like these numbers, it won't just be today that we're going to see an effect or the ramifications of these numbers. We do have a couple of Fed speakers talking today, one really early in the morning and then one around noon. At 8 o'clock, the dollar opens. 8:20, the bonds open. We've also got CPI, ADP, the petroleum status report. And if you notice the moves being made in oil right now, it's in direct relation to that warm fuzzy feeling again and the lack of real clear, oh, what's the word we're looking for, constructive outcome from the talks, right? So we had that extreme move in oil yesterday, kind of got it all back at this point. It's not much of a surprise that we get this kind of rally back up. If you keep track of the way markets respond when they get this kind of price action, very often it creates a liquidity vacuum. And then we see the market try to reclaim its previous level before continuing on and doing whatever it was doing before the event happened. You see it in smaller form all over the place. So, for an example, here on gold, significant, quick, very sudden, steep, sharp move, and then it just reciprocated right back up again. The VIX did sell off quite a bit yesterday. It didn't get below 20. Not the VIX futures, anyways. The VIX did get below 20. Um, that was one of the readings that we used yesterday to kind of validate the moves that we were seeing. So be careful with the EIA report today. Normally, this is one that we don't watch too much on a day-to-day basis. On a week-to-week basis, when this number comes out, generally we just go to USO and like get a short-term trade. But in the current environment, it could be the opportunity for a really nice trade. I would definitely be watching the clock at 10:30 for that opportunity. It's a cheaper company and it's really liquid options. Has a lot to offer. We hit the edge of the weekly expected move yesterday. That would be 46.25. It was a nice, good, slow grind up there instead of just spiking in one single day and hitting the edge of the expected move. We close inside of this range way more than we should, more than 80% of the time at the end of the week. So, statistically speaking, we've got greater chances of closing inside that box than we do outside of that box. One really nice thing about that kind of statement is that you can go back and look for yourself. You can look at every single week from Monday to Friday and then ask the question, did it close inside the box or not at the end of the week? This is a dotted line showing the first of the year. How many weeks have we had where the market closed outside of that box at the end of the week? Well, there was one of them. And if you go back and look, you'll find that we have like an 80 or a 90% chance of closing inside of that box. Well, that provides a lot of edge. It really brings in some perspective. We did make it through that red bar that I pointed out yesterday. We are on the other side of it now. And just as we would expect, we're getting a little bit of a Busby. Now, these are higher time frame signals, and it needs to be taken into context. But when we have a strong area of resistance and we finally break through that resistance, the market's very, very often on the other side of that, pull back to it and validate that old resistance as a new support. We nicknamed it the Busby. Well, it wasn't much of a surprise that after we broke through that major level, we're now getting a little bit of a pullback. It's exactly what we would expect it to do. Notice it did the same thing here. Broke out of a major resistance, pulled back, because it's what we expect it to do. It's also a part of the swing high, swing low, swing high, swing low, swing high, swing low. All right, as usual, we want to game this out. We've only got 3 scenarios. Situation 1, the market finds the economic news today to be disingenuous, maybe a little bit confusing, unclear, and we see a market just maintain this range and do absolutely nothing but sit inside of yesterday's price action. That would be scenario number 1. From yesterday's high of around, 46.32 down to yesterday's low. Well, I would use 2 lows. You've got the RTH low of 45.82, and then you've got the Globex low of 45.65. Those 3 lines would be my expectations if the news today, if the econ is in any way not crystal clear, that we would just stay range bound and likely choppy through the day. There is a cog line at 46.11. It's worth paying attention to. And then, of course, we got the roundy at 4,600. So that's scenario 1. Scenario 2, the news is really good. The econ is very clear. They can easily construct their forward guidance from it. And we see an aggressive move to the upside. Now, even though we've already burned a good 12 hours of the day. We still have time left. We got an ADR of 2%. We're down, yeah, a quarter of a percent. So we could easily make a 1.25 to a 1.5% move. We'll be conservative in the estimates and say that a 1% move. So we'll take back the quarter that we're down and then add 1% to that. That would give us a move today right around 4.675. That's not an unrealistic target, but it would take very clear, very clean numbers for us to get a move like that, right? It won't be subtle or soft. If we were going to start making that move, we'd see it. We'd see it in all the regular tools that we use on a day-to-day basis. It's very likely to include the two risk on sectors, but as we've talked about lately, it really could just the fangs could do it, right? We don't necessarily have to have the sectors in play if we can get that lift from the fangs. They're really outstretched at this point. I hate the phrase, overbought and oversold, but the fang names are sitting at a critical level. They're about as stretched out as you can get. So not much hope that they're going to be able to carry this market today. But, it's always possible. So that's the upside scenario. The other side would be that we get very clear numbers, but the market doesn't like the numbers that we get, and we see a downside move, which would at that point not just test the low of yesterday, but instead bring us back towards this existing megaphone pattern back from last Monday. So we'd look for 45.30, 45.25. The cog line at 45.11 would be about the far end of that downside move. Consider a downside move of, say, if it's really bad, a 2% move. Well, we're already down a quarter, so we could add 1.75 to the downside or subtract one. Say it however you want. We'll measure 1.75 downward. That would put us right around 45.30. There is a virgin cog line down there from Monday. And of course, there is an institutional pivot point. There's Monday's high, the Globex high, but still Monday's high. And then that VCOG is really close to Monday's open. I would be focused more on the cog line itself than the open, but that would be our downside scenario. So situation one, we just stay sideways today, maybe test those lows of yesterday. Nothing really extreme. Scenario two, we get bullish, and scenario three, we get bearish. Now, we were having the discussion in the chat yesterday about a market behavior. It's not necessarily just futures related. So just kind of stick with this for a moment. In accumulation and distribution cycles, the institutions, they play the game, right? They manipulate, they get a hold of analysts, they get a hold of their reporters, they get things talked about in the pre-market, they change the market sentiment through social media and talking and chatting, so that as we come into the open in a recovering market like we're dealing with now, we come into the market in a gapped up situation. I could have swore I fixed that line. So we're gapped up, we come into the open, everybody's feeling kind of good, and then they dump it down, right? So dump it down, everybody starts going short. Everybody's concerned about all the reasons that we need to be concerned. The shorts are piling on, the banks spike it. The shorts have to cover. It causes a short squeeze. The market closes for the end of the day higher than where it opened the previous day. Then it gets choppy and nasty in the overnight hours. Everybody's concerned about all the things they should be concerned about. We go into the open and we dump it back down again. And they keep repeating this process, but every day we close at that higher level. Each day the close is a higher level. And they'll continue to do that until they're fully allocated. They'll also do the same thing in reverse, where we go into the close every single day lower than where we closed the day before. And we get those rallies up where they dump everything and squeeze and pop it to the downside. And each day we close lower and lower and lower. They'll do that until they get out of something. Well, if you go back and you look at what we've been getting in the futures, it's exactly this. And it's not just the futures, right? It's Apple, it's all your big popular names, the punished tech stocks. They're sizing back up again. They're reallocating and repositioning in there. And we're getting those choppy mornings. Everybody's kind of wishy-washy, not quite sure what we want. We get the hard dump. Everybody starts shorting the living hell out of this thing, and then they squeeze them and spike them back up against it. Each day closing higher and higher and higher and higher. Now, they're not going to continue to do that forever. They're going to get allocated into their positioning size, and that's it. They're going to stop. But this is a classic move. If I could remember the book that I had read that taught about this, I absolutely would tell you. I didn't notice it myself. It was something that I had learned, but I can't remember where I learned it from, so I can't give attribution where it's due. The idea being, though, that I found it, you could find it. There is information out there that discusses it. It's an older concept. It's not a new thing. It's been around for a long time. It's a part of the whole discussion between Wyckoff and Dow theory, and the way the game is played. Um, Speaking of it, it very well could be The Art and Science of Technical Analysis by Grimes, where I read about this. Now, I've shared that book in the Discord for the Bullish Bears. So if you go to the books tab, you can find that PDF book, uh, kind of learn a little bit more about it. Right. So we've done the upside, downside, and sideways scenario. Something worth noting is the size of the value box is compressing, and we only have one area of support before this thing hits a shallow area. So our own current Globex low of 4,600, that's the line in the sand. If we happen to break that, then we're very likely going to go to at least Monday's high. Now, we discussed the pivot points already. We've already gamed out the scenario, but just looking at this, there is a little bit of volume right around that 45.70 area. I don't think it would be enough, right? If we start, it's kind of like kicking the little bitty snowball off the top of the mountain, right? The little snowball doesn't seem like much, but it picks up size and girth through the move and just gets bigger and bigger until it becomes something extreme. Well, it's always really, really easy to buy, right? Whenever you try to get into the market, you can always find somebody willing to sell. And so buying is really, really easy. Selling is not always so easy, especially when everybody's trying to sell at once, which is why, generally speaking, you get that phrase that markets, they take the stairs going up and they jump out the window going down. It's because everybody's trying to find a willing buyer on the sell side when everything is just falling and falling and falling. So while there is some volume there at 45.70, 45.68, right around that area, it's not very much. It's not very big. And I don't think it would be enough, because if we did start to break to the downside below 4,600, then I see that we're very likely going to go to 45.45. Yeah. Okay. Bringing it in on a day by day basis, you can see that there is numerous now volume point of controls, VPOC, virgin point of controls, untouched point of controls. We want to carry yesterday's level forward, which for us today isn't really helpful since it basically lines up with our Globex low. I mean, not perfectly, but yeah. Now, since we are talking about breaking to the downside today, the volume that we were discussing that says we could go to 45.45, below that at 45.32, there is a untouched point of control. So, it's not a gravity point by any means, but could consider it another level of support, kind of help stop this market from getting too extreme to the downside. All right, game it out for the Nasdaq. Same scenario, same situation. We are range bound between yesterday's highest point and yesterday's open. We had a really nice initial balance. That is the first hour of the evening between 6 and 7. When the initial balance is really narrow, there is an expectation that the that there is unfinished business that can be anticipated on the day. When we have a really wide, really big initial balance, then there's the expectation that the job is complete. They've accomplished what they needed to accomplish, and they've got no reason at that point to participate. And we did start to see a move through the kill zone between 2 and 4. Very often, when we see a kill zone move like that, it reciprocates back up to where we were before the move began, which would put us right around 15,250. It's also near that 2 a.m. pivot point, right? Which makes sense because that's where we started at the kill zone move. So we can game it out the same situation, the same way that we did with the ES. We've got an ADR of 2.7 and we're down, a 0.25%. 12 hours has gone by, so it's unlikely that we would make a 2.7% move, but we could easily make a 1.5% move. So we'd first want to give back the quarter that we're down, and then measure a 1.5% move beyond that. So in total, we'd measure 1.75, and that will put us at around 15,450. So that would be scenario 2, right? Scenario 1 being very likely we just stay inside of yesterday's price action, that we don't get negative, we don't get positive. The news is kind of wishy-washy. It's on track. It's exactly where it's supposed to be, and the market doesn't really respond to it. Nothing happens. Scenario 1. Right? Scenario 2, we get bullish, spike to the upside, break through yesterday's levels, and challenge that 15,475 or 15,450. The third scenario would be a move to the downside. We're already down 0.25%. So at this point, we would just want to add another 1.25 to that for a 1.5% move to the downside. That would put us really close to the end of Monday. 15,000, hard round number. That would be our bullish scenario. And I'm really comfortable with that number. It's nice when everything lines up exactly the way it's supposed to. If we look at that in the volume profile perspective, we do have an untouched point of control from yesterday, but it's so close to our own current low right now that we can basically say that it's been touched, right? Close enough. Has missed it by like what, a point or two. Beyond that, we have a point of control from Monday that hasn't been touched and is still fair game. When we look at the Nasdaq on the 30-minute, 10-day with the volume profile, you can see that just like the S&P, there is a very large amount of volume right at our current Globex low. That's the line in the sand. If we break that, we've got a very large, shallow area underneath it, and we're likely to move through that very shallow area with conviction. Even Monday's high, while it did line up with our measurements and our pivot points, has only a fractional amount of volume and very likely won't be enough to catch us, and we're going to hit the top of that box. When we're outside of the box, our expectation is that we come back into the box anyways, right? So if the news isn't positive, or if it's muddy or blurry and the market can't get clear sentiment out of it, we're likely heading back down to 14.9, 1500. So you look at the way that the relative strength has been moving for the last 42 days. We got 42, 21, 10, and 5. You can see the transition from a positive relative strength into a negative one. And then you can see the relative strength that's been strong all along. Semiconductors, real estate, growth names, technology, communication was kind of rough. It's moved back over, right? You can see that transition like a little bit of a wave where we're headed from red to green, or the other way around from green to red. So perspective and relative strength. So looking at the market over the last week, week and a half, we had some really good transition in communications names. Now you always got to be careful with a perspective like that because it doesn't take very many names to change a sector, right? If you kind of think about the way Tesla interacts with its sector, it's like a big bully. It just moves that thing wherever it wants. Notice one of those is transportation. If you subscribe to any Dow Logic, transportation is one of the names. It's one of the most critical sectors. It is the bellwether move. And we've gone from a relatively weak strength to negative, and then coming back around now into positive with a bullish trend attached with it. Most of these sectors do have a market maker move, which shows a shift in volatility. That's where the market maker move comes from, is from volatility. I have not yet. Plan on getting there when we hit the sectors. So there is a sea change coming in through the market. One ETF that we use frequently is the IGV. IGV is a collection of larger tech names. Adobe, Salesforce, Microsoft, Oracle, Zoom, Activision, Inuit Software, and Now. You can see that same turnaround that we've been talking about. Weak at the open, headed to the downside, trap shorts, rally back up and squeeze them. But it's that move in tech coming back around, right? That's the main focus that you want to really get hung up on. We're looking at the daily chart now instead of that intraday chart. The trend line breakover was clear in a lot of these names, like Inuit Software. There was a really clean, really amazing trend line breakover and a daily inverted head and shoulders there, right? So a lot of signals that we're beginning that turnaround. Zoom as well, right? Just starting the trend line breakover after a serious beatdown since November. Do you want to look at how many of these names have not made the extended rally, say, that Microsoft has made or that Apple has made, right? That they've still got plenty of room to run. Keep in mind also when you're looking at these, how many are still down year to date, meaning just from the new year. That's one perspective that you want to keep your eye on at all times. Where are we year to date? And then where are we in a 1 year period? That's the other one that you want to keep your eye on. Are we down in a 12-month period? Is the market above zero or below 0% year to date and 1 year since January, right? So how many of these names still have that upside move to get caught up with their peers and to be a part of that rotation that we've been focused on? Now, considering what happened in the overnight hours, looking at the news of the morning, anything that ran a good 6, 7, 8, 9% yesterday is very likely going to be the down thing today. Makes sense, right? We get that cyclical rotation, a little bit of linear regression and some mean reversion thrown in there. Not going to be too much of a surprise. Market condition. Not sure what. Oh, no, that is not. So let's bring it over to TradingView. S&P 500. We want to narrow this down to the S&P 100. So we're going to bring in the filter. I just had 110. God. Adjust this to pre-market change percent. Give it a color adjustment. You can see that we are in a risk-off environment. You can see in very sharp detail the FANG names are down this morning, which makes perfect sense. They've been the ones carrying the market for the last 7 to 10 days. Energy's up. Some of the hedge names that had been kind of fading back off are going to be up. We'll get to those in a minute. But even the names that are down, Apple, Microsoft, Google, Facebook, Nvidia, Amazon, the FANG names, even though they're down, they're not down significantly. And I mean, after that move in Boeing yesterday, I really expected it to be down more than it is. So I consider this to be holding up relatively well. Finance is really mixed. Now, we cheat finance a lot, right? We don't give it the attention that it deserves. When you say finance, it's just a very cheap little broad brush, but finance really needs to be broke down better than that. Insurance fits into finance, and then you've got your lending institutions, your credit cards, your fintech, regional banks. Where those banks lend is a real big deal, and then you've got your trading institutions in a part of those banks, right? So when we just say banks or we just say finance, we're doing a disservice to the analysis. So if you notice, there are some financial names that are up this morning, and then there are others that are down or flat this morning. As it has been since January, oil or energy and banks, energy and finance has been the day trades that have been, kind of carrying the load for me way more than tech, right? They've been the trades that has always been there. Every day I'm able to find something to trade in one of those two sectors, right? So same way again today, at least at this point. Tesla is on my list. There's these oh, it's a phrase or a statement. Nobody shorts Tesla, right? Like you got to be crazy to short Tesla. And in the long term, I couldn't argue with that at all. In the long term, nobody in their right mind would ever try to short Tesla. But in the short term, or even on a day trade, absolutely have opportunities to trade against something that has made such an exaggerated move. Keep in mind that it's very likely not going to be a short trade that you want to participate in until after the split. From the S&P, change over to the Nasdaq. We don't need a filter. It's already at 100 names. We just want to change the color scheme. That way it responds quicker. We're in a we're in a risk off environment. You can see, it red everywhere. Couple of names, mainly the names that were beaten down the most, are now turning green, and the names that were doing really good are now turning red. It's just that cyclical rotation, right? It's the mean reversion. From a swing high, swing low, swing high, swing low. It makes perfect and total sense, right? Keep your eye on the chip names. MU had a just absolutely amazing outcome from that earnings. Looking at the screen, the screener asking a question, well, how many names are down at least a 0.5%? Only 12 names. So while we may consider this market to be negative this morning or slightly bearish, it is only slightly bearish. We're not looking at a complete and total shift of market sentiment. We're just looking at a market that's finally taking a breath after such an exaggerated run, right? So don't bear up and try shorten this market for the duration. There has been the discussion about a bear market rally. I mentioned that at the start of the stream today, that we're hearing that phrase again, kind of being brought in or bandied about. So, keep in mind, just like we talked about in the large caps room yesterday, until we reclaim these previous levels, 4,800, 4,820, then we're still considered as being down, right? That this is still a negative market. So while all the signs are there that this is an early buying opportunity, that we're back above the major moving averages, the primary trend, which is looking from the left side of the screen all the way up to the right side of the screen, the primary trend is bullish. It has been, you know, no argument. The secondary trend, we had a significant pullback that breached critical levels, and we're not yet recovered from that, especially when you put it out on a weekly time frame, right? So we're still in a pullback. What we don't yet have an answer for, because this week isn't done, and it's something we really need an answer on. Get rid of this weekly EM for a minute. We would consider this our lower high. And right now, since this week is not closed, we don't yet know, is this going to be a higher high or a lower high? If it's a lower high, we're going to very likely retest that 4,200, right? So if we pull back on the week and close below that 4,600 and we get a lower high, that's not going to be good, right? And at that point, we are very likely going to retest these lows. But for the moment, we're still above 4,600. We're still looking to see a higher high, at which point it would just become, a rally back up after weakness. But you can see, using COVID for an example, on that rally back out, there were plenty of times where the market paused, stalled, made a significant move back down. That was a 200-point drop, in a week. And then again, where it got stuck, and even after getting back up to its previous levels, we had weakness, weeks at a time, where we were just stuck in that range with a lot of chop and a lot of pain to a lot of people out there, right? So while we're talking about making this move back out again, it's not a straight line. This indicator called market conditions is something that I'm currently building. It's not done yet. That's why it's not in the Discord. It's not going to be in the Discord until I'm done with it. That's a really nice thing about being a coder. I can code whatever I want, as long as I have access to it on Thinkorswim anyways. So when we're looking at these two indexes between the S&P and the Nasdaq 100 does not have financials in it, right? So when we're looking at the S&P and asking, well, how many names are down, we want to look and see, are any of those names finance? And you can see Visa's in that list. Bank of New York Mellon is in there, right? So we have some financial names, some transportation, real estate, the couple of chip names, kind of spread out a little bit. Not the kind of finance that we would expect to see. Flip that over to the NASDAQ, ask the same questions. How many names in the NASDAQ are down at least a 0.5%? 13. More chip names, a lot more chip names. A couple of retail, some China names in there. But overall, nothing really standing out. Now, on a day like this, these are the days where we really can't use the sectors, right? We're not going to get much help out of those. So, days like this, you really want to use your own watch list, right? You want to lean back on that CBOE list that we built. If you don't have that list, you can build it. I've made a video for it. It's in the Discord. Just run a search in the upper right corner and you'll find that. It's a simple video. It talks about going over to the CBOE website, where to find the data, downloading an Excel spreadsheet, and then you choose how many names on that list that you want. You could just look at all the companies that have weekly options, which is what we used to do. The problem with that is that there's 600 names, right? 600 names have weekly options. So as you can see, these two watch lists down at the bottom, that is those 600 names. And there are plenty of names that are up this morning, at least 0.5%. So definitely a lot of trading opportunities out there. You're just going to have to get away from the sector names and lean into your own personal watch lists. For me, it's still going to be finance and energy. There hasn't been anything that is consistently profitable as that right now. Really liquid, smaller name stocks, great options. That's been kind of the play. So we did mention hedge, right? The hedge names. If you look at the way gold is moving around this morning, we're up off of those lows. Very likely that the devil's metal too is up off of those lows. And Bitcoin is kind of sticking sideways. There was a major breach or a major hack of a coin bridge. I don't get into the nerd side of it, but people got robbed. I'm surprised that there hasn't been more blowback on Bitcoin this morning, or at least on the blockchain. So you can see we had that red to green yesterday. Beautiful reversal in silver. Big long wick off of that low. You could consider it a bounce off the bottom of the Keltner, and the likely expectation that we run back up to the top of the Keltner, just like we did back in January. There is a 20-period daily moving average overhead, so kind of be aware of that. It causes a little bit of resistance, and it is directly connected to the outcome of the talks yesterday, right? The hedge trades like oil, gold, silver, the move that we're seeing is directly connected to that. So, no amount of technical analysis in the world is going to get past that news. The news is going to come first. I missed it. I was looking for precious metals. It was maybe closer to the top. That's one of the nice things about using the Smalls Exchange. For those of you who don't know what it is, that's a new futures product that came out. Tom Sosnoff developed those. He came up with the micros, and he submitted application to have micros, and he was shot down. They said, no, we don't want you to do that. And then as soon as they shot him down, they stole the idea, and now we have micros. Well, he came out with the Smalls Exchange after that. And then, of course, Bloomberg stole that idea and came out with FairX in another, yet again, different kind of futures product. But the Smalls Exchange has one futures symbol that deals with, quote, precious metals, which covers gold, silver, blah, 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 down the list. right? So that's nice because then you just have the aggregate of all of the precious metals in a single name. How do you join the Discord? You go to the Bullish Bears website and you sign up for membership. And after you are a member of the Bullish Bears, when you go to rooms, it will have a link there that takes you to the Discord. Of course, you can also go to, I don't know, all over the place in here. There's links to the Discord all over the Bullish Bears website. So once you're a member and you're signed up, you can get to the Discord from there. So the S&P does not have the legacy sectors that we really want to see. So we kind of made our own sector list. Chips are down this morning. That's one of those sectors that we made. Just an aggregate collection of names piled into one gives us some perspective on an individual industry or sub industry. So you can see that response in MU yesterday. It's an absolutely phenomenal move. Took it to the anchored VWAP. It's where we hit our rejection point, very close to the top of the Keltner bands. Other than MU, the chip sector is down. There's a likely expectation that MU could also try to reset with its peers because the news is only going to last for so long, and then it's going to fall in line. Crypto, another sector that isn't quite represented in the S&P 11 sectors, mostly negative, right? And this crypto list is not a list of crypto names. It's a list of companies that either are heavily invested in crypto coin or are a part of the blockchain or heavily invested in the blockchain. Some of those names that are down significantly this morning include Riot, NVIDIA, and at the worst, SOS and Coin, Mara. So a couple of names. Look at that just absolutely amazing wedge, this really tight consolidation in Mara. Textbook perfect example of when we zoom back out and look at it from accumulation down into distribution, basing along these lows, and then the very likely outcome that we will yet again reciprocate and begin moving back up towards those higher levels again. There's even a classic head and shoulders in there that has already played out. We're just back down to these lows. This is not saying that you should just run out and grab Mara, right? No, absolutely not. We're still below major levels. When you're below the 200 and you're below the 50, of course, I mean, we're getting back above the 50, but this is still a negative market. Any attempt to run it up off of these lows would be getting in early in the technical analysis classic pattern entry. That would be considered an early entry. There's nothing wrong with early entries. Every choice like that has its own consequences. When you get in early, you get more of the move, but you also take the risk that it's a false move, and then more frequent losses. As long as your wins are bigger than your losses, then it's worth doing. Really comes just down to what kind of trader you are. Some people like the IBD system where you're literally buying at the highest point. And then others like to bottom feed and get in on the lows. Yeah, either way. There's no right or wrong on that. So for this morning, guys, I don't think you're going to want to really lean into the sectors. Use your watch lists. I've done a video on what I'm about to point out. It's useful. It's really helpful. It's one of the best intraday scanners that I've ever come across, and you don't have to code it. It's just already there. So Thinkorswim has a watch list column called the high-low graph. And without making any adjustments to it whatsoever, Just load it up, type in the word high, you'll see it's high-low graph. This thing does an absolutely amazing job of bringing trade ideas to you all day long. Now, I've modified it a little bit. Basically, took the code, I went over to the scanner, put it in there, and said, only show me stuff that has weekly options and then stuff that is hitting at least a 0.9 on that high low graph. The graph goes from a -1 all the way up to a 1. All right. So when we look at that in decimal form, 0.7, 0.8, 0.9, that would be getting bullish and then into that bullish extreme. I shared the link for that. I shared a video that explained that. It's in the Discord in the large caps room. Just run a search in the large caps in the upper right corner. Type in the words high low graph. You can see there is a video and a share link for the scanner. And it's all I did is tell it, just show me the top 90th percent. Right. And then I pointed it towards anything that had weekly options. Well, you could tighten that up significantly and point it towards your alpha protocol list, or point it to the CBOE download list, right? And that would really shorten it up a lot. So on a day like this, when we can't lean into the sectors, this is a really good way to go. Non-stop all day long, this thing is throwing trade ideas at you, right? And they're all going to be intraday uh, momentum plays. So you'll never run out of a trade idea. Cheers, everybody. Have a good morning. I will see you all in the large caps room. The stream will start at 9:15, and we'll get this day done.